enough for the exporter to ship. He must ship goods that conform. He must ship goods and present shipping document that conform to the terms and conditions of letter of credit. So letter of credit is a document. Welcome to another edition of Sharing Trade Information on DBA TV. And my name is Dele Ayimibo. Thank you very much for stopping by. In today's video, I'll be starting a series actually. And in this series, I'll be talking about how to mitigate payment risk or how to prevent payment risk using different options. And I'll start today with a payment method or trade finance instrument called letter of credit. Now, if there's one thing every exporter is concerned about is the challenge of being able to get paid after shipment. What if I do the shipment and the buyer refuses to pay? How do I mitigate that risk? That's a very, very valid question, common question, and a question everybody wants to find answer to. And that's what I'll be answering in this particular video. Now, in different videos, I'll be talking about different options that can be explored because this is a challenge that have solution. I'm talking about different options that can be explored, but in this particular video, I'm talking about letter of credit. Let me first of all define a letter of credit. By the way, a letter of credit is a trade finance instrument, but is an undertaking of the importer's bank, otherwise called the issuing bank, who issued letter of credit. An undertaking of the importer's bank given to the seller or issued in favor of the seller, otherwise called the exporter, which is also called beneficiary in the letter of credit, which gives assurance of payment when shipment is made and documents are presented that conforms to the terms and conditions of the letter of credit. When shipment is made and documents are presented that conform to the terms and conditions of letter of credit. This is a very, very important trade finance instrument. A very, very important trade finance instrument. It's been used for hundreds of years, actually. It enables an importer's bank to place its credit in place of the importer's credit. So if I am an exporter, I'm not looking to the importer to pay. I'm looking to the importer's bank to pay. However, there are conditions I need to meet. For example, look at that definition again. An undertaking of the issuing bank, the importer's bank, given to the seller, the exporter, which gives assurance of payment when shipment is made and documents are presented that conform to the terms and conditions of letter of credit. So it's not enough for the exporter to ship. He must ship goods that conform. He must ship goods and present shipping document that conform to the terms and conditions of letter of credit. So letter of credit is a document evidencing guarantee of the importer not to the exporter, but it has terms and conditions that must be met. For example, when a typical exporter see a letter of credit, they go and check the price, the quantity. Many a times they do not check the date of shipment, the duration for shipment, the time for presentation of document, the expiry, the quality specification, and other details. Document presented, for example. So as an exporter, when you receive a letter of credit, apart from checking the price, which is usually, or the amount, which is what everybody check, what are the terms and conditions? You will see a particular place where all the documents are listed, another place where you have additional condition. You see those two fields? Documents, additional condition. Those are the two areas that are very important for you. For example, the LC is going to stipulate date that shipment must happen. So if the LC says shipment should happen August 30th, and you shipped August 31st or October 1, that 1 day difference can be a reason for non-payment. Why? Your document will be said to be discrepant because the document you presented evidence that goods were shipped after the date is expected to be shipped. So, to the extent that letter of credit protects you, it also gives terms and conditions that can prevent you from getting paid if you do not meet those terms and conditions. That is why you need to check it very well and be sure the terms and conditions in this letter of credit. Am I okay with it? Am I capable of meeting those terms and conditions? For example, it will state that if it's minerals, for example, it will state the product and the quality specification. In fact, it will go further to say if the quality specification go below a particular level, the whole document will be rejected. So meaning that you have to read through carefully the document, the terms of payment as stated on the document, but more importantly, is to ensure that you present that document also early. Typically, by default, a document should be presented, shipping document presented by default 21 calendar days after shipment. 21, that means if I ship today, and today is August 1st, before August 22nd, I should have presented the document to a bank. Usually a bank in my country or in the importer's country. That's another issue. When you receive a letter of credit as an exporter, ensure a bank in your country is nominated with which the letter of credit is available with. That means you see nominated bank, they'll put the name of the bank. That's the bank you must take the shipping document to after you have done the shipment. Now, that bank should be in your country. If that bank is in the importer's country or is the importer's bank or the issuing bank, that means you must dispatch the document early enough so that if given the time of courier, about a week for arrival, the document will still get to the importer's bank before that expiry date. So there are a lot of issues around letter of credit that must be adhered to. So you must read very well the terms and conditions so that at the end of the day, what the letter of credit is supposed to do for you, which is to protect you and ensure that your payment is guaranteed and your payment is made, it does the job. But it will not do that job for you if you do not do what you are supposed to do. What are you supposed to do? You are supposed to ensure that goods are shipped on time, the content of the document are in tandem, consistent with the terms and conditions of the LC, and the document are also presented to the nominated bank on time. Usually, I would recommend within a week of shipment. Since by default it's 21 days, some letter of credit will state that you should present document within 2 weeks. That means you need to ensure you present that document to the bank within that period. The real challenge in letter of credit is that as an exporter, you must cross your T's and dot your I's. As an exporter for letter of credit transaction, you must cross your T's and dot your I's. In as much as it guarantees your payment as an exporter, it also gives you some obligation that you must meet as an exporter to enjoy the benefit and the guarantee that letter of credit provides. Meaning, you can actually have letter of credit transaction and you will not get paid on time. Why? Because you are not presenting document as at when document is expected to be presented. Or because you did not meet the term and condition. For example, you said LC number should be stated on all documents. You stated LC number only on maybe invoice or packing list or bill of lading. That as minor and small and minute that issue is, that can be a reason for not getting paid. But the fact still remains that a letter of credit is a document that can guarantee your payment. But you must learn to use it to your advantage. If you have other questions about letter of credit, please feel free to drop in the comment section and I'll gladly respond to those questions or even do a video on it if you so desire. If you like this video, if you have enjoyed this video, click on the like button, give it a thumbs up. If you have friends who are into import or export who will need to know about this, please share with them. Also, if you are new to this channel, click on the notification, click on the subscribe button. And if you want to know when we upload the next video, remember this is a series, and I'm going to be talking about other ways you can mitigate payment. I've only mentioned one in this particular video, and that one is mitigating payment risk using letter of credit. In the next one, I'll be talking about another one. I have about 6 or 7 of them I'll be talking about. So I always want to keep the video short so that at the end of the day, you're able to also watch it and learn within a very short time. So please come back to this channel to learn more about how to mitigate your payment if you are trying payment risk, if you are trying to go into export business. My name is Dela Imiba, and I'm your export doctor, and I'm signing out.